Welcome to Objection to the Form. This is Justin Humphries, and today I've got a special guest, Michael Cain of the Wilmington Investment Network. Welcome.
Thanks.
I'm excited to have Michael here. Today we're going to talk about angel investing and taking your business from a startup in the early stages to how do you acquire capital and really grow your business. And Michael's an expert at helping people with that and has had a lot of successful investments.
Don't oversell me now.
Well, I don't know. Your reputation precedes you. So one of the things that interests me a lot about your story is that you began as a practicing attorney. And and it had a pretty wide range of areas where you practiced.
So I started. I practiced for about 20 years. The more I got into, I was doing business, family law, real estate. That was the thing that you did up north with a general practice, and I gradually just kind of drifted into getting into business.
Now, did you do business law prior to being a prosecuting attorney?
No, I was the only live attorney left who'd take the job in Grand Isle County, Vermont. The other guy died in office, and so I got appointed. Then I got appointed again.
So would they have private practice attorneys take on the role
Yes.
of prosecuting cases?
It was a part-time job, yeah.
Well, that's interesting.
Yeah.
Do you have any exciting criminal cases you prosecuted, or?
I did have a death by homicide, and it's a little weird, but they never solved it. We think it was a cousin. The state trooper walked all over the evidence in the next to the bed where the woman was found, and then we called in a clairvoyant.
What is that? A clairvoyant?
Who the family wanted to pay to have this woman come up from New Jersey, and I'll tell you, she found a couple of things that was kind of scary, and then she told me about myself, which I really didn't want to know about.
So is this a psychic that can speak with the dead?
No, she worked in metals, so at that time I had a signet ring, and when she said I was really freaked out about it, and she said, "Okay, give me your signet ring, and I'll read you what's going on." And so I gave her the signet ring, and she said, "Oh, this is in March or April or something like that. At Christmas, you were at a wedding, wasn't it? Yeah, a lot of candles in the church. Yeah, it was all dark." And she went on to describe one more thing, and then she said, "Nobody believes that marriage is going to last, do they?" And I'll be damned, it did not.
Well, that can be a safe bet sometimes these days, but
It just got the hair on my back, my neck up.
Did she know who you were before she met you that time? I mean, would she
No,
have
I
a
was
chance to research you or anything like that?
No, she came fresh, and she'd never even seen me or anything.
It was a bit creepy.
No kidding.
So I've got a little bit of help this week too. This is Russell Nugent is our patent attorney here at the office, and I brought him in today to participate because we're going to talk a little bit of IP law in a bit. So if you hear somebody chiming in, that's Russell, and I'm excited to see what he's got to add today. So when you go from being a private prosecutor and practicing business law, how did you decide to transition from that into business?
The opportunity came by. There was a watering hole that I'd pass by on my way home every night that had fine French cuisine at the same time, and so I would go in there for courage to go home, and liquid courage.
Yeah.
And
It's the best kind.
Yep, absolutely. And so then one time I told the owner, "Hey, if you ever want to sell, let me know, because we really like this place." And so a year later, he called me up and said, "Hey, would you be interested in buying it?" So I said, "Sure. Let's take a look at the numbers and come up with a price." So I had a CPA partner at that time. We hired a third person as a partner to be the chef, and we went off and running. And that's how I got into buying a couple more bars, and then finally into Wendy's.
It sounds fairly comparable to Capiz Bistro in town. Have you been there?
Oh yeah.
Is that kind of how it was?
It was, but we had pewter plates, and we had French, basically a great menu, duck. They let me work the line every once in a while.
Yeah. Sounds like a fun way to learn some French cuisine.
Yep, it was.
So Wendy's. So I guess that's on the opposite end of the spectrum.
Right. That's kind of a short, long story. Buddy of mine came in, just 6'8", 300-pound guy who loves Wendy's, and so he comes into town one time. There's no Wendy's in Vermont, and he says, "You know what this town needs?" I said, "No." I said, "Wendy's." I'd never even heard of it. So at that time, I had secretaries and administrative assistants to make this world go around. I said, as I walked out for lunch, I said, "Find out who Wendy's is and what's going on." By the time I came back, she says the packet will be here tomorrow.
That's my mission, is to bring Popeyes to Wilmington. if I could do one thing in the restaurant business, or just somebody does it for me, that'd be great. But it's always a treat being able to pass by Popeyes, especially when the sandwich craze was going on.
Yeah.
Had to wait till traveling through South Carolina for that, but I'm hoping somebody can do that. I've put in several calls, emails. Nobody will call me back, but I want.
They're probably not franchising now.
Yeah.
Or this territory is maybe taken by somebody else.
Well, that's what I figured. A lot of times it's frustrating here with restaurants where you'll see, I know this probably sounds stupid, but I like Red Lobster.
Yeah.
And you'll see Red Lobster commercials from the Myrtle Beach market.
Right.
We don't have one here. We get plenty of Popeyes commercials as well.
Yeah.
And it's kind of the same thing.
That's that problem with the MSA being combined.
And by the end, you're talking about like the territories.
Yeah, the broadcast territories. So there's a metropolitan statistic area. So the advertising goes to Myrtle Beach because they've lumped us together.
Yeah. Well, so I guess, you try your hand at business because you obviously did very well. How do you get into angel investing? And first of all, I guess, could you explain what angel investing means?
Okay. I built the Wendy's business up to 28 stores, had 4 restaurants, 3 other businesses I was running, and I got sick of employees. So I sold the whole shooting match, and my wife was from Wilmington. So I said, "Babe, we're moving down to Wilmington. We're starting over." So I sold everything up there, came down here, and I happened to start going up to the CED conferences up in Raleigh, and met a bunch of people, got into a .bomb I invested in, and I thought this guy was really good and everything like that. I wound up almost killing him. No, we almost killed each other. How's that? And exploded, but I met a lot of nice investors, early stage angel investing. And angel investing is very early stage. When somebody has a concept, they look for angels to get the concept built out. It may be $100,000, or as you've seen on Shark Tank, people come in for $140,000, $150,000 when they ultimately need $1 million. It's just the start part. So you go in rounds. So the first rounds generally right now in this business are convertible notes that are difficult to negotiate because this is a problem between entrepreneurs and investors at early stage. The entrepreneur thinks his idea is worth $6 million, and he's got a plan and all that, but he has no prototype. He has never made it before, whatever it is, some reason. So you kind of got to push back on the valuation because you're buying in at a very early stage, and I mean the chance of loss is about 90% on your investment at that early stage. So what you want to do is you want to kind of get the valuation down, and then have a right to convert it.
And do you do your own valuations, or do you rely upon CPAs and people like that for that?
It takes too long, too expensive to do it. After a while, you can do it by gut, and then also you kind of get a little rough formula in your head about how many more rounds they're going to need, what is going to be the ultimate exit value, and so you kind of back into it.
Russell,
typically speaking, I mean, when you invest, when an angel investor gets involved, are they taking over? Or basically most of the ownership of the company? Are they taking control of it that way, or is it usually they're taking a smaller piece?
If you were in China, that's what they think you own. They own you. Here we don't. We don't want to manage. I've had enough managing people, so none of us want to manage the thing. We want to help, use our contacts to help them succeed, and coach them a little bit if they need it. But no, we don't want to day-to-day manage it.
I have a lot of clients that once they find somebody that has something they need, whether it's money, expertise, access to markets, or whatever, they seem a little quicker than I'd like them to be to give up control of the company to get that help on board. These smaller stage folks, they tend to, I say it over and over again, don't give control of the company up. You may need, I assume they may need to raise money, more than one time.
Sure.
So they can't give up but a small piece in order to keep doing that.
Yeah.
Seems to me it would, what's your opinion of folks that do that? It seems to me that's
Well,
probably.
I think they're predatory. When we first started out, Wynn started in 2006, I think it is. And when we started out, we saw a couple of deals that came in that were syndicated around the East. And these guys came in and they basically said, okay, I'll take your crazy valuation. You're going to miss your numbers in another 90 days, and I'll take control of the company. And now that's just, we couldn't stand that. That's just unethical. So I call it dumb money, and not shark money, but just mean money. They're
Is shark money a kind of an industry term, or is that something
that's
was
new. That's new. That's been invented. It came over from England. They had sharks. They had a shark tank type thing over in England, and then they brought it over and copied it.
So for anybody that's got an upstart company or an early stage company, how does the process go for getting an organization like the Wilmington Investment Network to invest in your idea?
Most of them come in as referrals. You try to get the entrepreneur to get out and meet people who are financially able to invest, but understand the process. And then maybe that person says, hey, talk to the guys at Wynn, talk to the guys at Tap up in Raleigh, talk to, they're all over the place. And so then you get them, you get in and take a look at the deal at that point. So it's mostly referrals, some cold, but we call them over the transom, business plans. You just toss them after because they're just.
So would people like bankers send early stage businesses over? Is it typically people that have failed through traditional methods of raising capital, like maybe like getting a loan or an SBA loan or something of that nature?
No, but you're right about that. I mean, there are a lot of people who go to a commercial lender and the guy says, I have nothing to lend against. They like assets and two ways to get paid type of thing. So that is not the normal path if they've got any training at all. If they're taking an entrepreneurial class over at UNCW or basically any place, they know they got to go put a business plan together. They got to go get a valuation right. They got to produce some financial projections and put a plan together and then get somebody's attention.
So do you guys have at Wynn, do you have a screening process?
Yep.
What is that like, or what do you require someone to submit to you before you really seriously consider their business or idea?
Well, I tend to weed out the not good ones, and I'll then send it around to my screening group. And before COVID, we would have a breakfast once a month and go through the deals. Now we're doing it virtually with Zoom. Thank God for Zoom.
Yeah, no kidding.
Yeah.
What do you, I have, my patent clients obviously are paranoid about somebody taking their wonderful idea and
Absolutely.
running with it. And my feeling is that trying to get someone in your position to sign a non-disclosure is probably a losing battle. What are your thoughts there as far as protecting confidentiality and what they should do?
If they don't trust us, then I don't want to see them. They got to understand we don't want to take over their business. We want to help them. Excuse me. They want to help them succeed. So we don't sign NDAs. VCs don't sign NDAs. I mean, we see so many plans and so many that overlap and all that. So I mean, it's hard to keep track of them just when we've got 30 in our portfolio right now. So no, it's basically if they don't trust us, then go someplace else.
What would be your advice as far as somebody trying to find somebody that they feel comfortable enough with they could share something without an NDA? I mean, surely there's some people you don't want to do that with.
Well, on an NDA you can exclude certain parts. So you talk if they are smart and they've gotten the plan together, they'll talk about it at a high level. They're not really anything about how the thing works. It's just what it does and what what problem it solves. So you can have a preliminary that way. That happens sometimes, and then sometimes guys will sign NDAs, get themselves into problems, and it's not worth the hassle.
It's got to be a large problem on your end with the number of pitches that you would receive.
Yeah.
You'd be inviting litigation, I would think.
Well, yeah. Well, thank God we haven't, knock on wood, not had done or had ourselves. We've heard of other groups that have been sued, but they're always really screwy suits.
So from the point, so you've screened the initial applications, the next that are at a monthly meeting. Is that just you and your partners, or does the entrepreneur join in at that point?
Not. We don't have a pitch from the entrepreneur. The deck, we look for a deck and an executive summary. And if it's convincing enough, then we'll go farther forward. And
what do you mean by deck?
A deck, a PowerPoint.
Gotcha.
PowerPoint presentation that's tight, to the point, and basically says what's the need for this product.
And does the entrepreneur put that together, I would presume?
Yeah.
And so you just have them email it to you, and then your group takes a look at it?
Yeah.
So if you're intrigued by the presentation, what do you do next?
If we like it, we invite them to present. Up until COVID, we would have an in-person presentation once a month. Now we're doing Zoom meetings, and that's been coming along okay.
So what is I'm interested in the presentation meetings. What does that look like?
Well, it's about 45 minutes, and since our group has known each other for so long, we tend to give them, I talk to them, I say, okay, you got 20 minutes to present the basics, and then you have Q&A, which will take you all up to about 45 minutes. What happens is our guys jump in right at the first thing, so the whole thing just starts going, and I say, expect to be interrupted. It'll be about 45 minutes, and keep to your points.
So it sounds more intense than what you see on Shark Tank. When you got that many people coming after you, I guess you got 25 opposed to 3.
Well, we have different expertises, and so if one of our people is a doc and they know that area, they'll kind of be the lead on the questioning. We've got a couple others who are very versatile in knowing what's going on in business and plans, and so they'll shoot questions in. So we get a pretty good idea in the first 20 minutes.
What tips would you give entrepreneurs looking to impress at a pitch meeting?
Practice their pitch, show their pitch to people who are friends, and say, okay, what do you get out of this? Am I solving the problem? Am I getting the idea across?
So is that the main point that you want them to be able to communicate, is how is your business or idea necessary to...
Right, is it nice to have, or is it need to have?
So do you ever run into pitches where it's just clear to you that the entrepreneur just doesn't have his shit together, and this is going to be a failure?
I get calls. It's obvious, somebody from nowhere, North Carolina or Idaho or whatever, calls up and says, I hear you guys got money. Do you invest? You invest in ideas? And I just politely tell them, no, we don't do ideas. We want to have a prototype, something that's more than that.
So that leads into a good question. You don't actually buy a raw idea. You're buying it or investing in an ongoing business.
Yeah, when we first started out, we did really raw ideas, and we got burned. I mean, really, but we learned our lesson. We're moving downstream. We want them just pre-revenue or revenue generating. Cost a little bit more to get into the deal at that time, but it's well worth it because a lot of the kinks have been ironed out.
And so when you're talking about wanting to get that sense whether the business person is going to be able to get you to the finish line, what do you look for?
Experience. What have they done before? Were they middle management someplace else and got riffed, and now they've got this idea to do something, and they say they successfully exited on something, but they were 5 guys down on the list. So we like the people who really do it.
So what's the ideal entrepreneur candidate look like? And I mean from an experience standpoint. You want the guy...
They know the space. They've been in the space for a while. They see the problem. They know how to fix it. In a med device, they know the problem is, for example, we just exited on a ankle repair system, which I can't remember whether it got a patent or not, but I'm pretty sure it was. The guts of it are most ankle repairs. They either do strap a wire around, or they and tighten it to put the two bones together, or they put a screw in, but the screws break. So this guy came up with a way to put the screw in, back it off, keep the tension there, and gradually go back and forth on it. It was pretty slick.
Yeah.
And so now he's just been sold out to a medical device company.
What importance do you place on the IP rights and an investor having a patent in hand, or in the case of a operating business, maybe a trademark or their branding?
In the IP, it's nice to have, but we expect them, if they've got protective something to protect, and it's not just proprietary, then we expect them to have filed some patents, but we don't expect them to have been granted. You ask if you had an office action yet on your patent. Normally, no, is what happens when we get the real early stage ones. The later ones will have their patents issued.
What are your thoughts on provisionals? Do you deal with anybody? I mean,
They all do. They all file.
Okay, I've had a number of clients that have managed to monetize or license their inventions before they actually get to issuance, but it seems to be in the non-provisional stage rather than the provisional stage. I typically don't advocate somebody skip the provisional unless they really seem to know what they're doing. They've got a lot of direction. They already know how they're going to get their thing on the market.
Yeah.
Otherwise, I'll typically direct them towards the provisional just because it's if they're really early stage and they've got a lot of other stuff to work out, that seems to make sense.
Right. I agree with you 100%. We expect them to have made some effort towards that. Possibly hired somebody or consulted with an IP attorney. Sometimes we get these guys where you can self-certify yourself as a patent applicant or something.
Registered patent agent.
Yeah, so I've seen that a couple of times, but most of them have filed something to put a foothold in. And then the other question is which countries do you file in? So you don't go to China. And that's a good
way to lose it, right?
First place to go, you don't go there. You go U.S., Canada, EU, and then branch out from there.
What advice do you have for basically a startup? Since you've got such a strict deadline to try and file something, at least get something in the pipeline for international protection, how do you guide them on whether or not to spend the money and when to actually do it?
You get a board. Every time we make an investment, we want to have a board of, an operating board of the entrepreneur and a couple of knowledgeable investors. I mean, with 3 is a kind of a normal start, and then you go to 5, and then if they really get some traction, they'll go to 7.
So what does that look like on the business entity end? Do you ask that they, if it's a corporation, I guess you would ask for spots on the board, or if it's an LLC, do you ask for, I guess, that your membership or that your investment be represented by a manager interest?
Yep, we do both. LLCs we like from a tax standpoint while they're getting going, because we can take an active loss on it if as they expend money, but we expect them to convert to a C Corp. And a lot of guys start out with LLCs. They don't do the bookkeeping right, so it costs them an arm and a leg when they finally convert to a C.
What can you do on the front end to get to avoid putting yourself in that position?
Do you use QuickBooks, or are you using what are you using for your accounting software?
But that's exactly what we use here is QuickBooks. So
Yeah.
some people just aren't keeping up with it, and it's a mess.
Or the cap table, or the chart of accounts is set up all wrong right from the start. So they dump it, especially with the self-help QuickBooks. They'll give you a bunch of different subjects that you don't even understand. You'll check the box, and then where does that go?
You mentioned the convertible note being a vehicle, I guess, that you use for your investment. How exactly does that work?
The convertible note is a promissory note, has a due date, normally a year or 2 years. At a very early stage, first time around, you'll do a convert that has to be paid back or converted within a year. And so you'll put in, say it's $1 million note. We participate in that note. We usually get a discount to the next round of normally 20%, and then we have if for some reason they get bought out before the notes, we have a participation in the note. Sometimes we get preferred, kind of like a preferred share type of situation in the note, and sometimes we don't.
When you say it converts at the due date, does that convert into an equity interest in the company?
They got to raise money, so they got to do an equity round.
Gotcha.
It's a new thing that's happened in the last 5 years. It's a way to avoid valuation as they grow. Larger groups won't take converts; they'll just do a straight equity round. Others have to do converts because they're not big enough to demand. They don't throw enough money at the deal to demand an equity round.
So an equity round, is that where you just go straight to purchasing an equity stake in the company?
Yeah, we usually call it a Series A. It'll be a Series A preferred, voting, non-voting, cumulative voting, all sorts of little nuances in that. The common can vote with the preferred, or the preferred vote as a separate. I'm getting into the weeds here a little bit.
Yeah, well, do you have, from your experience, are there common traits that you've noticed in your investments that have paid off versus the ones that have failed? Is there kind of anything that you can say that you associate with the winning investments?
It's the jockey. It took a long time. We used to be very interested in the bright, shiny things, but it's the jockey and the team that he puts together, he or she, or it as I call it, put it together, that they are able to execute on it, and they know what they're talking about. They're not stumbling around. Sales are a big deal. Having somebody knowledgeable in sales, they'll come in, they used to come in and say, well, yeah, IBM looked at us, or Microsoft looked at us, or something like that. We got an in on that. And we learned that's just, you're only talking to maybe some programmer someplace.
Yeah.
So have you ever had, in my experience, the patent owners, patentees that I deal with that have any level of success are usually working in their own field. I think you mentioned earlier that's typically what you're looking for, somebody that knows their space. Any advice for somebody that has a regular day job, but they've got some dream of going into some field, they've got some invention, they've got some sort of idea, but it's not in their typical daily workspace, it's in a tangential field. In my experience, those people are really fighting an uphill battle.
Absolutely.
Any advice to help overcome
Don't
that?
do it.
Don't do it at all.
Yeah. Good. I mean, no. If you got an idea, you're working in a corporate job, mid-level, something like that, and you're sick of your job, and you say, okay, I'm going to invent the next widget and leave my job. I'm saying, whoa, keep your day job. And if it's a patentable thing, play it off a patent attorney and say, okay, take a look at this guy. I got something I can patent. But yeah, no, they don't.
So kind of from back to the procedural standpoint, so you get the pitch, and I guess if your company's impressed with what you hear, what does the due diligence process look like?
Normally, you have a period of time, 30 to 90 days to do due diligence between the time of the pitch and the time you stroke a check. And during that time, we'll look at the financial projections, we'll look at the business plan, we'll look at the competition. Knowing your competition is very important. A lot of people don't know who their competition is or who could come in. They always have great ideas as to who will buy them out, but they don't know who's going to step on them. And then there's the part from an IP standpoint. Somebody may be working on the same field and have filed a patent beforehand, that's a predecessor in time, and they didn't even know about it because it's I can't remember the period, the time when that's
18 months.
18 months. It's quiet, so you don't know what's going on. So the things come out of everywhere. So if somebody knows the space well, that's where they're going to be successful.
Are you typically starting that due diligence process right at the pitch?
Right.
So you'll after they're done, you say, all right, let's sign up right now?
No, it's each of us have different specialties. So we kind of focus on the jockey so much, the entrepreneur, that seeing whether we believe that they can get something done. And then we go into the guts of who else is with them, who they know, who they have for their board of advisors, what area. We've started to specialize pretty much in medical device.
That's certainly a good industry to be in, but you would need, I guess, investors or people with that focused skill set of knowledge to really know what's real versus what's not in that
Correct.
area.
Yeah. So we tend to, and then there are other businesses we can suss out whether they're going to really solve a problem.
Are there any business types or areas that you just won't touch?
Lifestyle businesses, like owning a hardware store, a cleaning service, or things like that, where you're living on what you earn, but there's not anything in it for the investor, and for if anything. Lots of people do it with family, so they'll get their startup that way, and that's fine. But
well, and that brings up kind of an interesting point, because it seems like to me in a lot of small business is service related, and so there's kind of the concept of, is it a business or do you just own your job?
Yeah.
Almost. And,
Yeah.
and you see that, I think that's kind of what you're explaining, is that some of these service people, it's like, yeah, you might own the company, but essentially it's just your labor that's going into it. So you may get to determine whether you're going to take the job or whether you're not, or what your hours are, but it's a job.
Yeah. But and somebody who starts, a hardware store or something like that, they can be very successful, build it out themselves, have good employees, and make a heck of a lot of money. So they don't need any investors. And actually, once they get going, commercial banks will come in.
Yeah.
They got something to lend against.
That's true. So yeah, I guess I could see where that wouldn't really be something you'd be into doing with kind of the nature of your business in your group. Are there any particular red flags that tell you, hey, when you're going through that weeding through process you were talking about?
Well, resume. You check their references, see if they actually went to the school they said they did the actual things. We try to get personal references, and then we network amongst ourselves, all the angel groups. So I've got good friends out in California. We're looking at a med device deal. Pittsburgh, up in Boston. We're also a member of a group up in Boston too, and so they've got a lot of knowledge up there, and so we help each other.
Do you catch many people lying on their resumes or leaving people's references that they probably shouldn't?
People's references that they probably shouldn't has happened. I haven't had one that was lying about they graduated cum laude or whatever.
And from leaving people they shouldn't, is it maybe the relationship wasn't strong enough that they should do that, or they didn't? Maybe the reference doesn't know who you're talking about.
Correct. Yeah, absolutely. This has all sorts of different permutations of that, but basically the person says, "Yeah, I met Joe at something and seemed like a nice guy."
Yeah. So I guess would you advise anybody, whether it's in a job application context or applying for capital for your business, to reach out to your references ahead of time to let them know?
Yeah, absolutely. Yeah, don't want your references getting a surprise call.
Is that something you do pretty early on, checking the references? Is that an easy way to weed out people?
Yeah. There's some groups do better diligence than others. We're not particularly good at it in the sense that we're so diverse and dispersed and diverse, whereas others, like the Carolina Angel Network up in Carolina, they have a fabulous program where the graduates can invest in these deals, and they have 2 hired people that do just magnificent due diligence, and so they share that with us, which is great.
It surprises to me that the angel networks seem to be so willing to work together, that I would figure it'd be competitive.
Not really. We all want to. It's very occasionally you get somebody who wants the whole deal, but normally what you're doing is say that the normal raise we usually see is at least $3 million. and then all the way up from there. So having that much cash around in a group is not always what happens. So you got to put a syndicate together.
Well, that makes sense, and I guess that's kind of a way you can spread the risk amongst the various companies and networks and funds.
Yep, absolutely.
Is there any other strategies that win or that you use to kind of eliminate or to mitigate, I guess, the risk to the best you can?
Well, you try to say it's a widget that fixes ankles. You try to talk to an ortho person or many ortho people. Just say, okay, is this a better way to do it? Is it slicker, quicker, faster, cheaper, whatever it is? I mean, to an orthopedic person, if they can get in and out of a case 20 minutes faster because this works, that's a time saver. They can do more procedures and in a given amount of time. So that's a big deal.
Tell me a little bit more about your role with the company that you invest in. Obviously, you're not interested in managing the company for them, but at the same time, I can't imagine you just hand them some money and forget about them. Surely. So
a couple of times we do.
Okay.
We don't hear from them.
What kind are you doing more than just providing money? Are you providing expertise as well, or?
We'd like to provide the expertise, but if and we do, we've got a couple of members who are actually in helping startups and have kind of split their time with helping them the startup get going. It's a nursing home type of program, but the bigger groups have more support and give more support, and we just don't we're not on the phone with these guys all the time. We ask for quarterly financials, but we don't get them all the time.
Do you have any advice on, say, working relationships that just don't function? People that have been friends for years that try to start a business
Don't
together.
do it.
What kind of patterns do you see along those lines that you could sort of tell people to watch out for?
Well, you'd be given the same advice in the sense that you say, work out what happens if things go wrong first. If you're going to have a partnership, okay, do you have a shotgun buyout provision in it? Who's the lead person, who owns more of it, how much are you going to own, that type of thing. Work that stuff out before you go farther into it.
That brings up a really good point because yesterday I was speaking with with a client that had a terrible operating agreement that was something that was put together on LegalZoom.
Yeah.
Or something like that. You see it, like I'll see Office Depot LLC agreements and corporate bylaws, and it's clear that the people are, they're doing the best they can and trying to save a couple bucks, but it can really put you in a bad position down the road.
Absolutely. Those canned operating agreements are not really almost worth the paper they're printed on. You got to have a guy like yourself coming in doing an operating agreement.
There's going to be a certain level of understanding of what's in it too. I mean, I've
Correct.
quite literally seen someone get sued because they did not understand what calling someone a member meant.
Yeah.
They pulled something off the internet as well and just referred to the wrong person the wrong way, and that was what they hung their hat on when they filed suit. So.
Wow.
Are most of the startups you're seeing in hand with a quality governing document such as bylaws or an operating agreement, or are you seeing that you're running into LegalZoom or like a fill-in-the-blank operating agreement?
We haven't seen anything like that in a long time. Maybe when we were first starting, we'd see some stuff like that, but we weed them out very early.
So I guess that's when somebody presents something like that as their document, I guess that'd be a way of knowing that you're dealing with an
Sure.
experienced jockey that it's going to run into problems.
Yeah,
Someone that's frankly just trying to save a few pennies up front and can't really fund
right.
what they're trying to do.
You got it.
Yeah, it's certainly a ounce of prevention's worth a pound of cure. I mean,
Everybody, they hate to go pay a lawyer to do this stuff, but they need the lawyer so badly to get the advice, on how to put the thing together. It's just.
Are there any areas where you think your legal experience, training, and education have given you a leg up in the business and investing world?
Well, I can read the docs. That's the big thing. They teach us to be librarians at law school. So, basically that's the one thing that my background has helped. And the other thing is I've been in many businesses, several businesses, and kind of know I like operations, so I know what it takes to get that done.
And what do you think from you? It seemed like earlier you were saying that marketing is kind of, or sales experience is one of the key factors that you're looking at. Like, what do you think is a good way for somebody to really hone that or develop?
That's a tough one. It is really tough. You get an entrepreneur who comes in and makes the presentation. It's a great idea, and then he or she has someone who's in sales, or he says he's going to do his sales, and so they try to do too many titles as against really kind of focusing in on who the decision makers are and how to sell it. So you need somebody with a sales experience who can get in front of the company you're trying to impress and go from there, or sell to, basically.
Gotcha. Well, Russell, do you have anything else?
I don't believe so.
Well, Michael, I appreciate you coming in and spending the time with us today, and I certainly learned a lot, and I think it's really impressive what you've accomplished and what your company's doing. So thank you for your time.
My pleasure.
Pleasure meeting you.
Thank you, yeah.